Hi, everybody. Welcome to the inaugural CFRA Fireside Chat, focusing on our quarterly sector reviews. Today, I'm joined by Angelo Zeno, our Global Sector Head for IT and Communication Services. Angelo, welcome.
Thanks for having me, Patricia.
So let's dive right in. Let's start with the big picture here in IT and Communication Services. How are you viewing the technology and communication services sectors right now?
Yeah, so it's actually pretty interesting what we're seeing in terms of the rotation in the markets. Actually, over the last 3 months or so, and while both tech and communication services, if we take a step back, have been the best performing sectors, the top two performing sectors each year in 2023, 2024, and 25. The last couple of months definitely feels a little bit different. We're seeing basically money flowing out of some of the mega cap tech names, both on the IT as well as comm services areas, where Alphabet has actually been the best performing area among the Mag 7, more than doubling off the April 2025 lows. But interestingly, what we do think is happening at this point in time is a rotation down across these sectors, where some of the smaller and mid-cap names are outperforming, and also across other sectors of the market. It's something that we think could potentially have legs here over the next couple of months. And just given the gains we've seen over the last couple of years in both sectors, we think it's wise to maybe go on the sidelines as far as comm services is concerned.
That's really interesting because you do remain overweight on technology. But are you changing your stance really on communication services? Could you walk us through a little bit of the thinking on that?
Yeah, so absolutely. So for tech, again, we think the fundamentals remain a bit more attractive than on the communication services side. And quite frankly, we've felt that here, over the last couple of years. The AI infrastructure build out is really supporting the IT spending landscape and the earnings trajectory there. When we're actually seeing the highest target price upside or differential within tech across the 11 sectors out there. And when you actually look at tech right now, it is trading at a slight discount relative to its 5-year historical average. And to us, that's an attractive opportunity. We are downgraded communication services. However, the story appears to kind of maybe be losing its luster a little bit. It is now trading at a 17% premium to its 5-year average. But when we think about the downgrade right now, there's really 3 key reasons for it. One, you've got Alphabet, which is the biggest component in the sector, north of 50% of the weighting of the communication services space, but it's no longer trading at the discount it has over the last 3 years. And the main reason for that is some of the regulatory headwinds have now been alleviated. And you've actually seen really the AI story for Alphabet really start gaining momentum here. So it's actually now trading at a premium relative to its historical and to some of the Mag 7 names out there. The second reason I'd say we're downgrading the sector is just the lack of good stories that are out there. Alphabet and Meta still buys in our space, but when you start looking below the surface across the rest of the sector, we've recently downgraded both Netflix and Disney. When you start looking at those streaming related names, there's less upside, we think, here over the next couple of quarters. And then the third reason I'd also say we're downgrading the sector is you look at greater competitive risks that we think will emerge here over the next couple of quarters. A company like OpenAI right now testing ads. We think, again, that theme will start gaining momentum as we go into the second half of the year. And that could limit some of the multiple expansion that we've seen recently from a name like Alphabet.
I mean, it seems really clear here and certainly looks a little bit more toppy, I would say, at that 17% premium for sure. But what about earnings growth expectations? I mean, are we seeing those start to come off, or are we still seeing the strength and the expectation that we had in both of these sectors?
So for the IT sector, the earnings estimates have continued to go up for 2026. We were probably looking at 22% earnings growth for the current year back in just October. We're now looking at about 30% earnings growth for 2026. And the earnings growth trajectory still remains healthy as we look out towards 2027 at about 15 to 20% earnings growth. You're looking at, I'd say, an earnings trajectory that's a lot less attractive for the comm services area. We're looking probably closer about mid-single digit growth here in 2026. And that probably accelerates in 27. There's some difficult comps in 2026. You've got higher than expected spending, especially on Meta's side here this year, that we think is going to limit some of the earnings growth trajectory for the sector. And you just never know with Alphabet. If they come out and they announce some sort of higher than expected CapEx spend, that could potentially put further pressure on the sector. But ultimately, we think the trajectory for earnings for IT a lot more attractive than comm services at this point in time, which is why we keep the tech overweight and downgrade comm services.
So, Angelo, in that last comment, you actually mentioned spending or CapEx. How does that factor in going forward?
Yeah, I mean, so when you think about the CapEx spending environment right now, I mean, what we've continuously seen over the last 3 years is just greater than expected spending across both sectors of the market. But I will say this, as far as which sector benefits more from the higher spending, it is the IT sector because of the exposure they have to semiconductors and other aspects of that AI infrastructure build. When you look at comm services, a company like Meta now looking like they're going to enter the cloud business, at least as far as sovereign AI is concerned. That could potentially mean that they spend more than the street anticipates. We'll see what happens here with Alphabet. We do think that they're probably going to spend more than the street is anticipating. But we're also seeing a number of bottlenecks that are popping up here in 2026, whether it be related to some of the energy bottlenecks, which will probably be a bigger risk going into 2027, but still a concern in 26. The bigger concern near term is some of the upside or significant pricing increases we're seeing in areas like memory. Again, that'll benefit some of the names in the IT sector. It'll hurt in terms of the bottlenecks and the potential need to increase spending in some of these hyperscalers. And you've got two of them within the comm services area, which represents about 78% of the market cap for that sector.
And so as we start to think about what should we be doing, what should our strategy be going forward? You were talking about, there's a bit of a victory lap to be had in the call that we've had in communication services. You pointed out to the outperformance in 23, 24, and 25. So as we move to the sidelines, say, in that space, what should we do next inside that communication services?
Yeah, I mean, listen, I think you still need to have exposure to the comm services area. And to us, we're only, I'd say among the 11 sectors, this is the sector where we have the least representation of buys in terms of number of buys in the sector. But where we are still recommending the names are those top two names, Alphabet and Meta. And they are more longer term plays, despite the fact that they could see some choppiness here in the near term. So in our view, we wouldn't be chasing any names within the comm services area. What we would be looking for is any sort of notable pullback, let's call it anything in the lines of 10 to 20% to get more aggressive, especially on some of the bigger names in the sector. I would say this, we are avoiding at this point in time some of those lower quality names and some of those streaming names. So those are names at this point in time we'd say just stay on the sidelines and wait for some greater clarity there.
Well, great. I mean, one thing we talked about off camera is really about small caps. I mean, they have not been in favor for such a long time. So what are your final thoughts on small caps?
Yeah, and maybe I'll add also the geographic tilt that we're also seeing in the market. But when you think about the small cap arena, and our chief investment strategist Sam Stovall highlighted the fact that the small caps are trading at about a 30% discount to their 20-year average. And as a result, you could potentially see investors continue to have a risk-on mentality, but shift towards more of these lower quality names, and maybe we continue to see relative underperformance on some of the bigger names out there. But whatever the case is, what we are clearly seeing, especially in some of the areas that I cover in tech and comm services, we're seeing a rotation down within the sectors to some of those lower quality names. And we're actually seeing a rotation across sectors. And while IT and comm services haven't had the best start to the year thus far, what you've actually seen within Europe is the IT sector is the best performing sector within Europe. You actually look at Asia, IT also the best performing sector within that geographic region of the world. Biggest reason is just how it's constituted, where you've got a number of AI infrastructure build out players within those pockets of the market.
Well, this is certainly going to give some people relief, as the Magnificent Seven certainly made it extremely difficult over the last couple of years. So I look forward to continuing to see that rally in the small caps and giving people a little bit more opportunity for trading. So, Angelo, it leaves me just to say thank you so much for your time today. Great sound bites in a sector that's been extremely topical over the last few years. And to everybody else, what I would say is this is going to be a regular occurrence in terms of doing these sort of fireside chats on our industry sector reviews. Hopefully, it gives you a little bit of insight as to how we do our preparation and how we do our strategic thinking across the industries. And thank you so much for listening. Thank you.
Thank you.